Stays of 28 days or more. Those are long-term stays for Airbnbs, represented 20% of their bookings. That is a massive number on the backside of the pandemic. The other one is 200 million nights booked. That is a massive number after 137 million in the prior quarter, which is a pretty strong performance.
Yeah, and they're also seeing a jump in the number of active listings on their platform. That's up 15% year over year. So you take into account more people are traveling. There's more options out there. Obviously, good news here for Airbnb. The guidance, what Jared was just talking about, that is why we are seeing the stock off just around 8% after hours. But when you dig deep into what they are forecasting here over the coming quarters, it's still relatively strong. They're saying that the fourth quarter nights and experience booked, that growth is going to moderate slightly. It was up 25% this quarter on a year over year basis. So even though we had that 25% growth number, I guess the street, though, not too willing to give Airbnb any passes at this point. Average daily rates, what Jared was also just talking about, they expect that to moderate. Some of that having to do with the strong dollar here. So, Rachelle, I think overall, at least for the third quarter, very, very solid results from Airbnb here. But that guidance is really what Wall Street seems to be focusing on.
It's true. I mean, Airbnb has managed an earnings beat now for the past 6 quarters. Not too many companies can say that, especially in an environment like this. And when you look at how much Airbnb has been taking some market share from some of these hotel brands that are very well known, one of the things that's supposed to actually be fueling Airbnb's growth is this idea that they really go across different sort of market shares, different sort of travel options as well, giving them that much more diversification than, say, some of these big chain hotels, which are a little bit more limited. So definitely keeping an eye on Airbnb. But sad to see that down after hours, that forward guidance clearly making it tough. All right, well, let's bring in our guest now to break down this report. We have Jed Kelly, a managing director of equity research at Oppenheimer, focusing on consumer internet. So I first want to get your initial reaction to the data that's come out on the earnings for Airbnb.
Yeah, I think while you're seeing the stock down is 2 things. One, the buy side was a little bit above the sell side just because the third-party data, particularly AirDNA, it's a lot of data that the buy side used. It was pointing to like a 10% revenue beat. So I think that the 3Q numbers caught some people off guard. And then obviously, in this environment, right, you can't guide to a 4Q with moderating, with modest deceleration, in a higher interest rate environment and growth stocks going to sell off. And, I think the problem, Airbnb's executing terrific. It's a highly valued name. And in this type of market, even any little bit of a problem or slight deceleration is going to cause the stock to sell off.
Yeah, certainly. And that seems to be the case right now. Jed, when you take a look at the travel trends right now, obviously fears of a looming recession, people might be pulling back on their spending ability. I guess, how do you see that impacting Airbnb? Because even when you take into account the guidance that they're giving us and something you were just noting, they still expect pretty strong numbers here, at least for the current quarter.
Yeah, I think the way to think about it is, I think the key thing you want to watch, right, if you're an investor, is supply. Because if they can continue to increase supply, that means next year they should have enough inventory if people trade down on their trips, right? We still think people are going to travel next year. It's just they're going to trade down. So you would expect some ADR compression. And if they can get enough supply, there's the potential where they can make up the ADR compression with volume. What a lot of investors are right now nervous about is, this is a stock that's trading at 20 times EBITDA on 23 EBITDA estimates, and that's a high valuation. So if we go into a recession, you would expect it to, probably trade down to 12 to 15 times EBITDA. So there's certainly an amount of multiple compression risk here.
Just continuing to look into backward looking for a moment, because we addressed the guidance. I mean, 200 million booked nights is up 25% from a strong quarter in Q2, which was 137 million. A pretty healthy number in terms of their growth.
Yeah, they're executing flawlessly, right? Like, it's awesome execution. It's a great company. It's probably not the best stock given the risk reward if we head into a recession on the multiple.
Mm.
And Jed, I want to ask you about the long-term stays, those stays that are at least 28 days. That made up 20% of the nights booked. A lot of people were wondering, with a lot more people returning to work, that this was actually going to suffer. But this continues to be a growth story for Airbnb. Do you expect that to continue?
I would expect long-term stays 20% to stay relatively consistent. It's been trending that way for the past couple of quarters. I think the longer-term stays, like over 28 days, that's normalized with people going back to work. Younger kids having to still have to pay rent. I think where Airbnb is benefiting, it's a little bit on the margin. You're probably staying 1 or 2 extra nights. Say the average stay used to be 4 or 5 nights. It now can probably be 6 or 7 just on people being able to leverage the work from anywhere, where instead of having to fly on a Friday, come back on a Monday, I can now fly on a Thursday and come back on a Tuesday because I have a little more leeway, right? That's where they're benefiting. But on the 28 days or more, I would expect that to continue at 20%.
Jed, you have a market perform rating on the stock right now. What's it going to take to get you off the sidelines and more bullish on this name?
It's more just it's hard to get in front of this and upgrade it if we have a pending recession. You just looked back to 08, 09 price line, which was growing rooms 50, 60%. Its multiple compressed to 10 times. I think if we go into a recession, Airbnb's multiple can compress to 12 to 15 times, which is $80 on the name. So, still 20% downside.
But do you see anything in this report that gives you a better sense of the macro environment that there could be a recession around the corner?
No. All the travel names are not going to give you that. You've had the airlines came out 2 weeks ago and said demand's strong, right? Southwest came out last week, and they're guiding for 4Q revenue acceleration. There's nothing that the travel services or travel is telling you right now that we're heading for a recession. It's just the big unknown, and that's why investors are cautious, because they eventually think the Fed's goal is to raise rates to curb demand. So eventually that should seep into travel, but it hasn't yet.